This is Danny Gould with the Gould team selling Silicon Valley. Welcome to another Silicon Valley market snapshot for the last week here in March of 2019. Folks, we're almost there. We're almost at Q2, and as we wrap Q1 up, I really wanted to dive into the heat maps today and talk about a central theme heading into Q2, especially if you are a home seller. So let's dive into the heat maps right now. I want all of you, so if any of you have been watching my videos for any extended period of time, you would know that when we started the year, a lot of these areas were in the plus 2, 3, or 400%, and if you noticed, most areas now are in the double digits or the 100% range. And so while there definitely is way more inventory this year than last year, the acceleration, as I've talked about, of the active inventory has definitely decreased, or is definitely not as pronounced as it was last year. And so some of the numbers have caught up, if you will. Not fully caught up, but are catching up. Do we expect the active inventory to reach the low levels that they were at last year? Absolutely not. If you look at the numbers year over year, you definitely know that we're way up and above where we were last year. And if you take a look at some of these numbers here, right, this is how many active homes we have right now: 1051 active condos and townhomes, 537. If you look at 2017, I mean, we're already quite a bit above that, especially condos and townhomes. And then 2016 as well. 2018, the anomaly, if you will, was way lower than both those years as well. But this year, we're definitely way higher. And if you look, the active and pending, I've talked about this several times, active and pendings, there are more actives than pendings, and that's the first time this has happened since 2013, I believe, for an extended period of time. I mean, if you look, my goodness, I mean, the entire year we've had that trend, and so the market is showing signs of slowing, right? And that has a lot to do with the fact that the active inventory right now is fairly high. Now, what does that mean for you if you're a home buyer or a home seller? A couple things that I really wanted to chat with all of you about today is this idea of patience. Right? I think now, as we head into the spring months, I've talked about this idea of feast or famine, right? If you're a home seller, you're either going to get multiple offers or have a lot of interest within the first couple of weeks that your home is on the market, and it's likely going to sell for a very high price or perhaps even a record-breaking price, right? Prices have not necessarily gone down in a lot of these areas, especially if it's a very, very sought-after listing. That being said, if you're sitting on the market past that 14 to 21 day period where you generally get a lot of activity up front, it's human nature to start to question, well, what's wrong? And it's obviously human nature to panic. And, there's quite frankly a lot of agents out there that when we reach that 21 to 30 day period, especially here in Silicon Valley, they're very quick to tell their seller, we have to reduce the price. And I would encourage all of you to not do that. Do not give your money away. The market will respond. The market will give you what you want if you tell it and you give it enough time. We're not nowhere close to being in an environment where there's so much inventory that you will get drowned out in the noise if you don't sell within that first 14 to 21 days. Sure, there might be less buyers. There might be less overall interest as time goes on. However, patience will always give you the best chance at getting the highest possible price for your home. Do not be quick to overreact and reduce your price or, be silly and take it off the market. There's no reason, right? This is Silicon Valley and people are used to selling their homes in 7 days over the last 4 to 5 years. That's not happening anymore, right? It's not happening anymore, and the numbers are here to prove it. I mean, with more homes than there's been in the last 4 or 5 years on the market and less pending sales, what do you think is going to happen? Especially if you have a condo or a townhome, right? I want you guys to pay attention to the condos and townhomes right here, 537. I mean, we're at double where we were at in 2016 and 2017 in terms of active listings, right? And then there's less pending as well. so than there was in 2017 and 2016, right? So I mean, think about this. I mean, if there's less noticeable demand and more homes on the market, right? Obviously, a lot of people say, well, doesn't that mean that there's going to be some sort of correction? Well, not necessarily, right? Because the truth is that we've been in an incredibly frothy environment. And just because the numbers are skewed a little bit now doesn't necessarily mean that the market is going to react right away. There will be some leading indicators, right, of a potential correction, but these are leading indicators, right? When does the correction kick in? When does that actually happen? Who knows, right? And it could take some other extraneous circumstance, some other extraneous economic factor to cause all of this to burst. And there are a lot of economic forecasters that are actually saying there will be one more rise before the fall in this next recession. And just because there's a recession doesn't necessarily mean that prices are going to go down 15, 20, or 25%. It could just mean that there's a slowdown in the market, right? And things take even longer to sell. We're in Silicon Valley. You know, think about this. We're in the area, we're in a very economically safe bubble, right? Safe space. And so with all the money that's here right now, it is very hard to see where there will be some sort of drastic shift in the market. I could be wrong. I'm not an expert, but I'm just looking at what's happening right now. And if the numbers are this skewed, as compared to what's happened over the last couple of years, and the market's still this good right now, you know, I think that is a telling sign. Things are still selling. They're still selling for very, very good prices, some selling for record-setting prices. So there's no reason to start thinking that the market's going to like go down, right? And so if you're a buyer, that's why I would definitely say that, you know, encourage you to get out of the mindset that like you're going to get a deal. It's not going to happen, right? It's not going to happen. If you're a buyer in today's market, you are still going to have to pay a very, you know, you're going to have to pay market value for the home, right? Plain and simple. And the market value is and will continue to be the last comparable sales, right? And so I know that I'm going over the data right now, right? It might seem a little bit, I don't know, what's the best way to say it? Some of this might seem a little repetitive, right? And it's true. On a week-by-week basis, there is a lot of repetitiveness, right? But if you look at where we're at now versus the beginning of the year, a lot's changed, right? And so all we can do is continue to look at the data, analyze the data, and make predictions. But at the same time, right? Just trust your gut, trust your instincts, and don't be that guy that makes a rash decision because your home didn't sell in a week, right? That's not a smart way to play. In this environment, patience will reign supreme, and that's it. That's the way the cookie crumbles, folks. So you know who it is. It's Danny Gould with the Gould team selling Silicon Valley, and I'll catch you guys in the next video.